Ankur, let's start with the journey that led you to Glean. You started your career as an analyst at JP Morgan, and then you worked at Bridgewater and also ran your own hedge fund. So, why did you choose Wall Street as a place to start your career?
Yeah, it's a great question. I started my career on Wall Street because it's so data driven. At the end of the day, as a trader, you just are taking in a lot of data of the financial markets, economic news around the world. You're digesting it, and then you're trying to make great decisions off of that. And then you also get real great feedback from the markets as to whether your decisions are right or wrong, right? So it's really fun. It's intoxicating. It really for a data driven person, it's a perfect place to be. So I did that for in a bulk of my 20s, essentially, JP Morgan, Bridgewater, and my own hedge fund. Um, and the way I look at that journey is that I was trying to find signal in the noise, right? There's tons of noise in the markets. How do you figure out the proper signal? And then how do you actually go and make great decisions and then hopefully make money off of those decisions?
What were the most memorable moments from that time?
I think there's just so many. Like I think May 6th, 2010 was a flash crash. So basically, you saw an immediate drop in the markets, very, very significant. And I was basically like pretty junior on the desk, trading those markets, saw the moves, was just astonished by just the pace. And it's just like, it's a moment of shell shock, right? It happens, there's nothing you can do about it. And then you're trying to figure out like afterwards how to react to that. And what ended up happening was basically the market valuation just recovered pretty quickly. So the prices recovered and some trades were canceled. But in the moment, you're panicking, right? Because all of a sudden everything goes down 10%. When in the normal market is like maybe up or down 1%, right? It's never down, up or down 10%. So pretty shocking moments. But I think that's what makes it fun. It's like every single day it's unexpected. No single day is a repeat of any prior day. That's really fun.
Were you highly leveraged at that point? Was it a real big issue for your place where you worked at that point, or it was more of a overall market panic?
So I was at Bridgewater at the time, and I think there was momentary panic for me myself, in particular, just being in that seat. Um, I think in the grand scheme of things, it wasn't that big because we were so diversified. Like when I was at Bridgewater with our portfolio, with so many different exposures that no single market tanking or crashing would have really made that big of a difference. Um, and I think I also came to appreciate diversification, right? How do you diversify your different exposures so you don't get caught if one asset that you're invested in blows up, which is what happened with the flash crash.
Yeah, Bridgewater is known for their emphasis on diversification.
That's
And
right.
I wonder what are the other things that you took away from Bridgewater. They're also known by their peculiar culture, I would say. How? What's your memories of that culture?
I personally loved being at Bridgewater. It was intoxicating for the reason that everyone had to basically adhere to the principles, right? Like we had a set of principles. Basically, it's guiding principles for the corporation, and so it does feel cultish, but it feels cultish in a way where you have a level of clarity around how you should interact with one another, how decisions get made, what matters most to the company, and how to grow it and how to be successful. Most startups, most companies, the culture isn't as strong as it was at Bridgewater. Bridgewater is known for its very strong culture. And I think for some people, it's not the right place because it's too strong of a culture. Cult can mean something that's negative, but for me, it was something that was positive because it created a sense of belonging. But one of the biggest things I took away from Bridgewater is that you do need principles to govern decision making, whether it's investment decision making, managerial decision making. Um, until you can distill how you think and how you make decisions into a set of guiding principles, you're basically shooting from the hip, firing from the hip. So that level of rigor, systematic process, that was really important. And since then, that's like been a fundamental part of how I operate any single startup, any single business. It's fundamental to how I operate as even as an individual.
We'll talk about how you apply these principles at Glean now. But before we do that, let's kind of dwell a little bit longer on the journey part. So then you founded, I believe, your own hedge fund, and that was a data driven hedge fund. What was the trigger for that? Why did you decide to do that? And what were the lessons learned from that experience?
Yeah, a lot of lessons. But the reason why I did it was at Bridgewater, we worked with a lot of data. We tried to basically understand how all of the different um, capital markets flowed. So US and international markets had a capital flow across businesses and governments and individuals. So for me, what I really wanted to focus on was doing my own startup, doing essentially a hedge fund, right? In that part of the journey, but to draw on lots of different alternative data sets. So you have basically conventional data sets that Bloomberg and Reuters of the world report on, but the alternative data, especially at that time, so picking up things like sticker prices in grocery stores, um, email receipts, like that was becoming a bigger thing. Like these data sets were really valuable. They're really informative. And I wanted to create essentially a hedge fund that analyzed data in that regard, and then we made decisions off of. So we were very early in the days of alternative data, using data science. But that's essentially what I saw as an opportunity. And then we built a fund. Now, I think the challenge we had is that a small fund, you basically have no reputation, no brand. And so you have to build that track record, and that track record's hard, right? So for us, we had to build several years of positive returns, and then pitch our fund to institutional investors like pensions and endowments, and that's a challenge because pensions and endowments, they manage billions of dollars, and you're basically a nobody coming in asking for $100 million, $150 million allocation. So definitely huge headwinds. I think we built a great business, but at the end of the day, we just couldn't get enough capital under our belts to sustain it. And so we ended up shuttering the fund. But some of the things I learned during that experience led me to where I am now, which is really pivoting more into technology, more into software, more into AI, right? So all of those things came from that part of my journey.
There is a lot of conversations about how any data edge will be eventually arbitraged away or compete away by the hedge funds who will also use it. Do you see it that way? Do you see that the data age can be sustainable?
I don't think the data edge is sustainable at all. And the reason why I say that is markets are pretty efficient over the long haul. And the challenge is, when you're a hedge fund like Point 72, you have teams of data engineers, data scientists, market analysts, and they're pouring through the data, trying to figure out where there's a dislocation, and then they make decisions off of that. And then as soon as they do, they force the markets to back to efficiency or more towards efficiency. Um, I don't think it's necessarily an end state. It's a journey, but they do that. They basically capture that alpha, and as soon as that alpha is gone, that market opportunity is no longer there, and then you have to basically search for another segment of the market with a dislocation. And that's a race. That's an arms race. I mean, these hedge funds, the biggest, largest hedge funds, they're spending millions and millions, sometimes hundreds of millions of dollars building out teams, acquiring data, building out great infrastructure. It's really, really hard to compete, not only for other hedge funds, but particularly for individuals, right? Which is why I feel like if you look at investment apps, you see a lot today where it's a DIY, do-it-yourself approach. I just don't think that works. I think it's very hard for an individual to make any decision on the investment side and beat basically the professionals at it, because the professionals are just better armed, better informed, and they do this for a living, right? It's just really hard to compete in that regard.
It is definitely hard to compete if you're trying to play the same game that they're playing. With your limited resources and your limited expertise and time, you will definitely lose. I wonder if the horizon makes a difference here. If how big of a horizon you can think about or operate on when working with these data driven approaches versus, say, an individual investor who may have a 5, 10 plus year horizon
Mhm.
as a target for them.
So I think when you use data, it's more short term. Sometimes it could be, for high frequency trading, you're talking about milliseconds, right? Or seconds or minutes. Like it's pretty short time scale. Um, and then when you get to more market moving events, so I used to also work. I led the data and machine learning team for an alternative data firm, and we would have email receipt data on, for example, Tesla reservations. So we knew what likely numbers were for Tesla before they reported it. So you could position yourself for any given quarter. So you basically are trading 15 days, 30 days ahead of the announcement, and so that's like a month long horizon you have, and you use intel from the email receipts to go and position yourself, and then hopefully it'll be right when Tesla reports the numbers. So it's really hard to compete on those timeframes. I think the longer timeframes that's a little bit easier for individuals, right? Because they can bet on an overarching trend or theme that they really have conviction in, and then position themselves and do that in a diversified way. So instead of betting on just one theme or one trend, long term trend, they can bet on 10, 20 of those. And then all of a sudden you've bet on 20 diversified themes, topics, trends that you really have conviction in that will play out over 10, 15, 20 years. And I think that is the more prudent approach for most people that want to invest for themselves. Because the shorter time horizons, that's much better suited for the professionals.
Yeah, it seems like if that's the tragedy or paradox of the modern do it yourself investing, that they kind of motivate you to invest on these shorter time frames, and then, or maybe not necessarily by intentionally, but that definitely what we see happening. And then of course, if that's the main mode of operation, you should expect the individuals to lose to those well-funded professionals. And I think realizing that as an individual investor and understanding appreciation that dynamic is very important. I don't think we pay enough attention to educate about that difference in the time frames and why it is so important to think about it in this way of competing against the big guys and where their edge is versus where their edge is much less pronounced.
That's absolutely right. And I think part of like investment apps in particular have made this worse. Because if you look at an investment app, the metrics that matter are how often a user logs in, like daily active users, monthly active users, how many engagements you have. So you've now gamified it, you've made it simple, and that encourages individual investors, particularly ones that maybe don't have enough experience or discipline, to go and trade more frequently, to check their balances more frequently. Because the app developers want that because those metrics look good, particularly for their VCs, and they view this as like every other app. But I would say the opposite is true. It's when you're investing for the long haul, you don't want to be checking your balance statements on a daily basis because then it evokes you emotionally. And when you get emotional with investing, you make bad decisions. You start buying high, selling low, right? You have FOMO. It's a horrible way to invest. So I think more app developers that build investment apps will have to think about user engagement from a different lens, which is maybe you engage them by news that you deliver, research, or you inspire them by different things that are happening. But it's less about convincing them to trade more often or check their balances more often, because you don't want to have this roller coaster emotional ride. I feel like the best investors, and this was true when I did this professionally, you want to be disciplined. You want to be um, very systematic in how you make decisions, going back to the Bridgewater mentality, right? You apply a playbook, there's a lot of discipline. You never make emotional decisions. And that's really hard for individual investors to really understand and internalize.
Yeah, it almost feels like the majority of the communications from your broker, you as an individual should have the type of communications that tell you, that remind you what's important and what's not, and what to focus your attention, and how not to get swayed by market moves and different news, and stay your course.
That's right, and I think so. So one last point on this, I think investing long term is managing relationships and emotion. It's an emotional thing, right? So I think apps will have to figure out how to tame the emotions of investors and to build great relationships, especially when things aren't going well. In a year like this year, right, 20% down, the markets are crypto's down even more. Different centralized exchanges have gone bankrupt, right? So trust. And managing emotions, like that's going to be such an important aspect of next gen investment apps. And I'm super fascinated by sort of what will come next there.
This is a very interesting thing. It's so important to get it right. We're on a journey. I can't say, and I agree with you here, that we're not there yet. But it's so important to get it right and find that way for every individual investor to build wealth through actively participating in economy as an asset owner, not just as a producer. So 100% agree with you on this one. Now let's, I guess, switch gears and get to Glean, where you apply your passion for data and AI, but now for the internal finance needs of the organizations. So talk about Glean's value proposition and what it brings to the table.
So Glean AI, we're an accounts payable company, right? So we help our customers pay their vendors. On the surface, that's who we are. But really, when you look at the guts of our organization, we're a data-driven company, and by that I mean we are in the business of taking all of the data on an invoice, all of that spend data, and surfacing that to the end user in a way where they can see that spend that they have among their vendors over time. So if you have Datadog as a vendor, it's not just looking at your spend the previous month, it's actually looking at that spend over time at a line item level, really understanding the drivers of that spend increase, for example, and also comparing that spend with that of your peers that also use Datadog, right? And that's only possible if you can take that really valuable intelligence that's present in an invoice and creating a structured data set from it. And that's what I've done in the past, right? That's what I did when I ran a hedge fund. That's what I did at previous startups. We were in the data game, unlocking value from, like I said, email receipts. So this is basically more of that. But we're doing it in a way where it's in a beautiful accounts payable interface where they could pay their vendors, but ultimately they could use the intel that we surfaced to negotiate with their vendors to manage their spend long term.
And in terms of your customer profile, who are the perfect customers for Glean AI?
The ideal customer are large SMBs, right? So SMBs that are on the larger side where maybe they've done a Series A, Series B, they have 50 to 200 people in the organization. That's an ideal profile today. And the reason why I say that it's ideal is at that stage, you have dozens, maybe hundreds of vendors, and you're starting to get to a point where you need to introduce good processes as you scale. Because if you don't, then basically as you keep growing, you're going to have a really hard time understanding the change in your vendor spend because those decisions are going to be made by department heads and the department heads aren't going to be looking at the invoices because that's now the finance department's role. And so you get this really weird thing where vendors are brought on by department heads, but the spend is approved by the finance team. And so that gets pretty bad. That leads to problems down the line. So that's an ideal profile right now. I think as we grow Glean AI and do our Series A ourselves, we will likely target mid market. And mid market is a segment that we love because those companies are sizable companies. They have a lot of spend, and they have a lot of opportunity to improve that spend. And what we can deliver to them is benchmarking, right? So we could say, this is how much you're paying. This is 20% more than what your peers are paying. Here's why. Here are the line items you should go and negotiate with your vendor. So they can unlock, hundreds of thousands, maybe millions in spend savings through the insights that we have. So that's why I always say, like, we're an accounts payable company, like on the surface, but really we're helping them get all of the data out of the invoice and use it to manage their vendor spend for the long haul. It's really intended for a CFO.
This benchmarking is a very powerful thing for sure. I believe some publicly traded companies do it for spend management, but I'm not sure how popular or how well distributed that technology or that approach is right now among the organizations. I think for the most part, organizations still do not have any visibility into what their peers are paying. So you'll be opening this opportunity for them for the first time.
That's right. I think today, if you want to know what your peers are paying, you back channel, right? You ask people on Slack, maybe you call up your CFO buddies and ask them what you're paying for a particular vendor. But it's very old school, smoke and mirrors way of understanding if you're paying the right amount. And there are point solutions, like, for example, AWS spend, cloud spend. There are the vendors that provide analytics and benchmarking there, but it's pretty niche, right? It's only for cloud providers. Whereas for us, like, we could serve a very large set of vendors because every single vendor, for the most part, issues an invoice. And the data's there. It's like waiting to be digested. You just need to unlock that from the actual document. And since we specialize in ML and data, we're able to do that, right? That's the secret sauce that we bring to the table. And that's what we delivered. That's what we're delivering through that accounts payable product.
What are some of the most impactful case studies of customers using Glean in real life?
So Datadog is a big one. And the reason why I say that is uh, Datadog has pricing that is hard to analyze because you need to normalize the different line items that they have on their document. And a lot of them are very technical line items that, if you're on the finance team, you have no idea what service you're buying from Datadog. And the different versions. So, for example, with Datadog, you could pre-commit spend. So you could agree to some spend amount. So it's called committed spend. Or you could pay as you go, which is called on demand. So it's two variations. And then if you incur spend over your committed amount, it's called overage, right? So all of a sudden you have three different versions of the same service, and you have no idea what the unit price is until it's been normalized. And then you could realize that the committed spend is about a third of the cost versus overage spend. So if you're consistently incurring overage spend, then you shouldn't be, because either you should use Datadog less, like maybe you're using it in ways that are inefficient, or if you know that that's the actual spend that you want to incur, then go ahead and pre-commit to a higher level. So you don't get hit with the overage rate, you get hit with the upfront pre-committed rate. So those are like really important nuggets that we're able to uncover from analyzing hundreds, thousands of Datadog invoices, right? So that's the sort of insight that's only possible at scale, and that's what we deliver through the machine learning that we have.
This is a very nuanced approach to analyzing the spend. I wonder, what's your thought process about how to make it scalable, how to expand it to hundreds or thousands or tens of thousands of different vendors?
So the way we solve it is twofold. We have a data pipeline where all we do is extract, classify, and map the data for every single invoice that we receive. Now that is scalable because these are models that are being orchestrated. The models basically perform OCR. They take the data on the invoice, they classify it, so invoice date, due date, line item name, line item description, and then we map it to a canonical set of vendors and line items, right? So that's scalable. It's model driven. Once we have that data in a clean structured format, then the analytics, that itself is also scalable because we've found ways to normalize all the line items, like get unit prices and get quantities and get periods, so that, based on the start date and end date of the billing periods. Um, that's all scalable as well. What's a little bit harder to scale is the domain knowledge that you need for any given vendor. So, like Datadog, you need to understand the different variants of the line items, right? Like the on demand, overage, and such. That is going to still require human effort. And we're okay with that because if you do that for the top, let's say, 1,000 vendors, you're unlocking tremendous value. And over time, you do this work for any given vendor. And then once you have it, you could just put that into code and then it becomes part of what you delivered for every single client for that vendor from there on, right? So over time, we'll expand this from like 1,000 vendors to tens of thousands just through the human effort and scaling that with code.
This is definitely a great example of the scale effects or scale economies where you do work once and then hundreds of hundreds of thousands of customers can benefit from that work and optimize their spend. What would you say about the use cases or the customers that are not a good fit for Glean? Is there any segment or any sub type of use cases that you wouldn't recommend Glean for?
I think there are a few. So I think if your spend is primarily card based, we're not going to be a good fit. We don't have a card program today. In the future, we may, but players like Ramp, Airbase, Brex, like they're card companies primarily, right? They issue virtual cards, so that is an area that we don't touch today. We wouldn't be a good fit for that if your spend is primarily card based. Now we could complement Brex or Ramp. So if you have invoice and card, of course, like we could be the invoice side of the picture. That's one area. Another area is very large enterprises, right? So very large enterprises that have huge complex needs. They have like multiple subsidiaries. They have international legal entities, and basically they need this complex approval process to approve an invoice, and they need to match it against a purchase order, right? So the PO matching that they need, and they have multiple GLs that they need to synchronize into. Now that's so complex because the organization is complex, right? And so what we bring to the table is the machine learning, the data side of things. But what they truly need is better management of like workflows and approvals. And like a Bill.com is better suited to work with those bigger, larger clients. But for everyone else, so large SMBs, mid market, um, we're a really great fit because we're a modern solution. We live on top of all the data and you just have a much better UX and UI, right? So all of a sudden it feels like a very modern take at accounts payable. Whereas like some of these other players, they've been around for a long time. They do the work and they're very good with like all the additional features they bring to the table, but their UI feels a little clunky, right? Their user experience leaves something to desire. And I think that's the opportunity that we saw as well, which is let's make this super modern, elegant, intuitive, and do this on top of all of the data.
Yeah, the accounts payable systems weren't the ones you would bring up as the examples of elegance and UI simplicity, I'd say. And speaking about those big customers, big organizations that need much more complex processes in their procurement, Glean is not probably a good fit to serve them right now as a fully fledged product. But there is another product you are developing that probably can make sense for that niche, which is an API based set of services that those bigger providers then can integrate into their software suites. So, can you talk more about that one?
Absolutely. And we're super excited by this because we think it's going to unlock tons of monetization opportunities. And it promotes us on the mission that we have at large, which is we want organizations to be able to better understand their spend and manage it. So the APIs, right? So the APIs are built for the core IP that we have at Glean AI. So one set of APIs are for invoice processing. So it's what I described earlier, where you um, process the invoice. So that's extracting, classifying, mapping all the data on the invoice into a very clean, well-structured schema. So that with that, you don't actually need to do any data entry on your invoice, right? We do it for you. It's managed by our machine learning models, plus humans in the loop when the invoices are particularly tricky. But what you get is this like really clean structured data set on the invoice that you pass through. And that's really valuable for larger companies, even like a Bill.com, to use to go and power their software for larger enterprises. So the customer, their customer, wouldn't have to go and do data entry, right? They would use Glean's AI to go and power the invoice processing, and then the net result is very clean, structured data that their customer sees. So that's a way for us to scale our technology to other bill pay and AP software. The second set, and this is even more differentiated, um, are these analytics APIs. So this is the benchmarking that I mentioned. There are the insights, so you get really time series insights on your spend at a line item level, and you could unlock all of the value from the invoice processing that we do in basically like a BI way, a business intelligence sort of way. But that's how we make the benchmarking available to the masses because there's no world where every single customer uses Glean AI for accounts payable. So how do we take what we built and really unlock the value? We do that by having APIs available for developers to use as part of their own bill pay product. Again, promoting this mission that we have at large, which is help companies understand and manage their spend.
Bringing all the innovations that you've developed to the broader market. This is an interesting approach. I haven't seen much of it done before, especially in the finance field. I think there are plenty of APIs on infrastructure, compute level, for example, and some other areas. Now we see a lot of APIs in machine learning models, foundation models, but the APIs for some of the financially linked services sound pretty revolutionary to me, except maybe for the that's you have this experience with the alt data. Is that where the inspiration comes from?
I think a couple of things. It's funny because when I ran the hedge fund that I had, we didn't actually develop our technology to be public facing. So like analyzing all of the alt data, we used it internally, right? So it was an internal for internal consumption. But then the startups that I worked at after the hedge fund, we did unlock a lot of value through the core technology that we were building, like NLP technology. And I think having had that experience at the hedge fund that I ran, plus the startups prior to Glean AI, one of the things that I saw immediately was you can go build a fully like formed end-to-end product, and that's a really opinionated way of delivering value. That's what our accounts payable product is. But at the end of the day, you should stop there because if your mission is a bigger, more ambitious mission, there are ways for you to unlock value in by just taking the core technology you have and making it public facing. So you see API companies in fintech, for example, for payments or for infrastructure, compute, like you mentioned. But I think data driven and ML driven APIs are going to become more of the norm. So in this case, the invoice processing field, you do have companies that provide APIs like Verify or Rawsome, Ocrolus for bank statements. They do have APIs available for customers to call and then get data back. And they're really good at like the basic invoice level data, right? Like the header, like the payment terms, the due date, the invoice date. But since we built all these models to analyze the tabular data, the line item level data, we think it's differentiated technology that should also be surfaced as an API. Otherwise, like if we have the API, we have one customer, which is the Glean accounts payable software. And if we just do that, you could build a business around it, of course, but you're leaving so much value on the table because you've built this really great technology that you want others to be able to experience, to get value from. And it doesn't have to be through Glean's AP or accounts payable software. It could be through any other bill pay product that wants to unlock benchmarking, for example, for their customers. And that's essentially what we're doing now. That's the other big product line that we've launched.
Right. Most of those other players you mentioned, They do offer APIs, but it feels like these APIs are bundled into their main fully fledged product. The payment processors is the exception, and it's an important one. I agree with you. Okay, let's get into the AI systems powering Link capabilities. Were there any important recent innovations in AI that became the trigger for you to say, we can now start a new type of company and do things that were not possible before?
Absolutely. I think 2018 was the year where you saw large pre-trained language models, most notably BERT by Google, right? So BERT changed the game because before that, you basically had to train models from scratch on the particular problem you wanted to solve. Post 2018, you had large pre-trained language models, and by that I mean models that have been trained on tons and tons of publicly available data. So think of this as web data, right? And because these models are learning the rules of language, um, they can be quickly applied to different domains. So for us, it's invoice processing, right? So when we founded Glean AI, the reason why I decided to found this with my co-founders was I knew that NLP had advanced since 2018 to the point where invoice processing can be done at a high level of precision. So you essentially get high levels of straight through processing, which means that it's a really beautiful experience for the end user. So when we founded this company in late 2019, it was a year after BERT was released, and we said, let's go, kill this use case, which is invoice processing. Let's unlock all of this data, which is so valuable. I mean, I know how valuable data is because I used to unlock that from email receipts, credit card receipts, clickstream data, to make investment decisions off of. That's what I used to do. So for me, it was like a no-brainer. If we could unlock this value off of an invoice, then that's going to be a value to end users. So that was the big moment. I think since then, technology has only gotten better, and document processing has become really, really great. So we use this particular architecture called Layout LM, which uses not only textual data on an invoice, but actually uses the structure of the data on the invoice. So think of this as image data on the invoice to go and classify um, the different fields. Because invoices aren't totally unstructured data, right? There is some structure, like the invoice date, the due date, they usually appear in a certain part of the invoice. The line item names and descriptions, again, it follows a tabular based structure. So if you could use the image locations of the text along with the actual text, you get to high levels of fidelity in terms of the extraction. And that's essentially what we've used to build our core technology.
And you mentioned that you use the open source pre-trained models to power Glean capabilities, but you don't use them off the shelf. You do a lot of work in-house. So what kind of work you do to fine-tune these models, and what kind of challenges the team had to overcome to get to the level of quality that you can deliver right now?
It took us a long time. I mean, frankly, all of 2020 and 2021 were spent building the pipeline and training at this point 2 dozen models. So you're absolutely right. We take off the shelf models and then we fine tune them. But to fine tune them, we had to set up an annotation platform to label invoices in exactly the way we wanted to extract the data. So we had to be very opinionated as to what fields we wanted to extract per our schema. And then we set up a team in the Philippines. So we have a multi-person team in the Philippines, and all they do like day in day out is label invoices, right? And when we first did this, they had to label every single field on an invoice because we didn't have any models. Now we're very good with our models to the point where they're making very few adjustments when they label the invoice. But every single time they make an adjustment, they're basically telling the model, hey, look, you got this a little bit wrong. This is how you should actually tag this particular field. And then our models are training on that data. And we actually have daily training of some models, and then we have weekly training of other models. As I said, there are 2 dozen models at play. But we had to build this annotation platform, annotation pipeline, um, to then fine tune the models and then ultimately orchestrate the different models so that invoice processing could be done. And invoice processing isn't one problem. OCR is one aspect, extracting and classifying the data, that's another part of the problem. Then mapping, for example, the vendor names and the line item names to a canonical taxonomy, that's entity linking and entity resolution problem. So you're basically solving half a dozen NLP AI use cases to deliver this clean, structured vendor spend data set.
Now you have a lot of data to train your system on. But when you just started, how did you go about solving this cold start problem, getting this first access to the data to train your models?
So that's a really good question because that's the first problem with machine learning is that you don't have data to actually train the models. In our case, my co-founder Howard Katzenberg, he was the CFO of Better, so the mortgage company Better Mortgage, right? And fortunately, through that relationship, we were able to use invoices from Better, and then also a couple of other basically friendlies that we had through Howard. Because he had a network of CFOs, and so they basically offered up their invoices in exchange for a year's worth of free service from Glean AI, right? So they were like the first customers. They got a free year's worth of service from us from using the software, and in exchange they provided their invoices, which then allowed us to start annotating and fine tuning the models and then delivering some value. And then as that got better and we started bringing more customers, then every single customer, we were able to kind of use their invoices to make the models better and better, right? Ultimately giving them a better experience over time.
This is a great way to solve it using the first design customer, we can call them, I think. Was it just data or also some guidance, some feedback on the early versions of the product that you got from the Better?
It was more than just the data, it was feedback. So we actually were able to present different versions of insights and benchmarking, to Better and to other customers that we had on the early days, and their feedback was invaluable, right? And I think that's the right exchange, which is they give us feedback and data, and in exchange we give them early access to our product for free, right? Because that's a very valuable way of getting user feedback early on. It's worth so much because then the next customer is able to benefit from all that user feedback that the early customers were able to provide.
Right. And another side of that cold start problem, data problem, is the investment side. You raise money, you often want to show investors something that works, but to have that, you need to build the system, train the system. You need a lot of capital to do that. Less than you used to, but still reasonable amounts. I wonder, how did you all go about raising your first round of capital and overall thinking about the fundraising strategy?
So we actually raised our first round in January 2020. So this was like 2 months before COVID. At the time, we'd been working on this problem for 3 months, right? Not a long time, and it was a pretty sizable seed. It was a $3 million seed that we did, at least the first leg of it, and we were pre-product, pre-revenue. We didn't have anything to show, like anything tangible to show. Now, what we did really well was we were able to really articulate our vision for what we were going to build. We had a survey of over 100 CFOs that basically said, yes, like spend management is a problem. There's waste. We know there's waste, but it's so expensive to figure that out. We don't have the time. We don't have the team, right, to be able to do that. So I think we had that user feedback, which helped validate the use case. And then our vision was backed by our experience as founders operating at previous startups. So we had like the right components of the team. And so I suppose you could say we had the right founder market fit. So myself, like analyzing data, doing machine learning at a number of startups prior to Glean AI. So it wasn't like a question mark whether I could build the systems to do invoice processing. Howard, he'd been a longtime CFO. He took On Deck public. He was CFO of Better. So he had managed many organizations, very large organizations. So he understood vendor spend. He was seasoned. And then our third co-founder, he did data as a product. So he was very good at building product um, where the underlying product is the data, but it just happens to be surfaced, like for example, in our case, as a accounts payable software. So we had really good founders with complementary skill sets to solve this very particular problem. And I think that coupled with market timing, right? So that's also really important. Like when you go out to market, if we were to raise, for example, pre-product, pre-revenue this past summer, would have been very difficult because of the timing of the market. But fortunately, we did. We were able to raise, and then since then, we've been building this company. And then COVID hit, and we had to deal with the remote work culture, and there are a lot of challenges that were thrown our way. But it's been a beautiful ride these past 3 years.
This is a great thing that happened to you, and you're right. Having founders who are such a great fit for the market definitely helps. Were there any pre-established relationships with the investment firms that gave you the opportunity to reach out to them and shorten the cycle?
Yes, yeah, certainly that was the case. So Howard, in particular, because he was CFO of these organizations, he had built deep networks with VCs, right? And so we were able to leverage some of that. We did meet some venture capital firms that we had no pre-existing relationships with, but I think this is a game where if you know enough people in the network, it allows you to then open doors to people that you don't know because now someone else is vouching for you, or because you're getting interest from a handful of notable VCs, then the other VCs also want to take a look at you. So we had a relatively easy time raising money in that period. And certainly now, if we look at the market, it's become much more challenging. It's much more metrics driven, particularly if you're doing like a Series A or Series B or later, right? It's all metrics. And so for us, at this juncture of our company, Series A is our next milestone, and we had originally slated that for potentially sometime this year. We have plenty of capital in the bank, long runway. So we said, let's not force a raise right now. There's like no need to. We have the luxury of time, at least some luxury of time. So we will go and test the market next year for that in 2023. Because if you can avoid raising right now, it's better to, because it's almost seen as a negative signal by VCs. So that's kind of the path that we've taken. It's also a path that I advise startups um, to take, which is like find ways to cut your burn, extend your runway. Glean AI could help, but there are other things you could do, like payroll side of the equation, just so you're not forced to raise. You can raise on your own terms in 23 or 24.
There was a lot of pressure to grow fast and burn capital as fast as possible in the service of that fast growth during the, I think, 2021. Yeah, that was the peak of it, I think. And now the narrative changed. Did you feel that pressure yourself as founders during the peak of the hype?
It's hard not to feel that. We absolutely felt that pressure. We felt pressure to go and do different things that were, let's just say, they weren't core to our investment thesis or our business thesis, which is like virtual cards, right? Like we're not a virtual card company. Our bread and butter are invoices. Now there are great card partners that we could potentially partner with to introduce virtual card, but we felt a lot of pressure to introduce a virtual card because other companies like Brex and Ramp were doing the same. And I think fortunately we didn't chase those trends. I'm sure we chased certain things that we shouldn't have had, but I think it's hard not to feel like you should go crazy and grow as super fast as you can last year because everyone was doing it, right? You were forced to, and uh, I think we were much more measured, which then gave us the ability to, have decent runway right now. But I think there are probably plenty of startups that felt this pressure, maybe succumbed to that pressure, and they were betting on a raise this year to go and extend their runway. And all of a sudden, they had built this great business, but they just run out of funding, or they're about to run out of funding. And that's unfortunate. It's like a casualty of the way that they were forced to grow in 21 that then forced them to run out of capital in 22 once the narrative changed.
Right. And the most concerning corner of that situation or of that story is when they were also encouraged by the investors who hinted at the fact that they will supply more capital later just to become less excited about that idea when the time came. So this is, I think, a very important lesson for entrepreneurs, that you can never rely on any commitments from anyone. You should always have this idea on the back of your mind that what if things won't go as planned, and where will I get that additional capital to get through the tough times that may come. And it looks like you did this. So you was it in like intentionally making sure you have this cushion for the hard times, or was it more of a just more cautious approach?
I mean, at the end of the day, we're a vendor spend management company, right? So we're really cost sensitive. That's in our DNA. That's a mission we're on. So when it came to managing our own finances, we tried to operate pretty um, efficiently, right? We tried to as much as possible. And so that's why I think that helped us a little bit. I mean, the other thing is that we were still in building out the product last year, so we weren't spending crazy amounts on go to market, right? So we had built out a crazy large go to market team, didn't have huge ad spend, weren't doing crazy sponsorships or promotions. So we were able to kind of retain some of the capital and grow in a more measured pace. I think a couple of things for us though, like this year, spend management became much more important, right? So all of a sudden, the value prop we have as a company became more apparent to many companies, because before then it was like grow your revenue, don't worry about expenses because you could always raise more. Now it's look, revenues come under pressure, that's important, but the only thing you have true control over is expenses. So go and control your expenses so you could go and have less burn. And we're a great software tool for the startups to go to do that. And we that's why I exercise that same level of just I guess just discretion and diligence in terms of how we manage money.
Frugality is in your DNA. What else is there? How all your experience at Bridgewater that we talked about and other places where you were part of instructed how you think about building a culture right now at Glean, and what is that culture about?
So I think a couple of things I learned, and I'm still obviously evolving the framework for this, but I think as you build out the culture, the people that you hire, especially the first like dozen, 2 dozen, they're so vital, right? They set the culture for the rest of the company. And so what we really try to focus on are when we bring on a person, what really makes them motivated, what really makes them tick, what inspires them. Because if they're just looking for a job or they really like the problem that we're working on, but they're not inspired by the mission, it becomes really hard because they become like a mercenary, right? Whereas like for us, we need people that are I guess closer to if you had to describe it like a part of the cult, right? Like they believe in it, believe in helping other companies manage their spend because they identify with the problem statement. So we really look for that when we bring on talent. Um, we also try to find talent that it loves to collaborate. So they're not, they don't have to be the 18 player, like just be the standout success, because we're not looking for singular stars, solo stars. We're looking for how well do they collaborate in a team environment, which means that you're spending some of your time training, mentoring, making someone else's experience better because you have a skill set that's complementary to what the rest of the team has. And so that's what you deliver. That's what you spend some of your time doing. And that's this is all stuff that I picked up at Bridgewater, where it's very much team focused as opposed to any given individual. And then the other startups that I ran, um, but honestly, it's been hard. Like, I think remote first is really hard. And the reason why I say it's really hard is as the team grows, you're having fewer and fewer touch points, right? Because you're doing a few calls a week, maybe once a week with every single person on your team, maybe some group calls, but you don't have the face time to build trust in the same way that you do if you're present in the office. So that's been a struggle because when you're present in an office, you go out for lunch, you go out for drinks, you celebrate successes, you commiserate over losses, right? Like there are these shared bonding moments, and working remote is just much harder to do. So I think we're still trying to figure out that out, which is how to have really great culture when you're a remote first company. And I think we might do like offsites and such to bring more of that culture in person, but that's been the biggest struggle so far.
Right. Did you discover any good ideas of overcoming these issues so far? You mentioned some points to celebrate. Did you try to kind of reimagine them in this remote first environment?
We've tried and we do some work on this. So we'll have happy hours once a week, um, where it's virtually people come on and they we'll play games, listen to music, right? So like have a little bit more social time. The other thing that we try to do is like really call out what's going well, um, and then also call out what's not going well, but do it in a way where it's like you are celebrating the wins, but then you're also identifying like things that aren't working, right? So you feel like it's a team effort, and this is done at a team level. So we're saying like as a team, this was great that we got this done, or we accomplished this milestone. And since we are a data company, we could celebrate data-driven milestones like certain levels of straight-through processing, certain levels of precision, so you can quantify that. And I always found that to be really important because I, as a professional investor, numbers really govern sort of how you perceive how well you're doing at work, right? So returns and what profits you've made for your clients. And in the data side at Glean, we do the same thing. We try to quantify the success that we have. And if we're shy of that, then we try to work as a team to solve it. So that's like the celebrating successes, commiserating over losses phenomenon. We try to do that remotely. Um, the other thing that I'm really a firm believer in is you need to empower every single person on the team to make decisions async. So you can't operate a top-down org because it doesn't scale well, right? So you need to empower the people that are closest to the front lines that see the problem to go and make their own decisions. And then they could, if they really need help, they could certainly go and check on the decisions that they're making. They kind of work through that with you. Um, but they should be empowered because then that gives them a sense of purpose. It gives them a sense of autonomy, and it allows them to grow because they're forced to make decisions and master more areas versus like like the other alternative is everything runs through a single person or single set of people. Now all of a sudden it feels like you're playing a game of telephone, which is hard in person but is near impossible when you do remote work.
Yeah, this isn't something that I thought about, that if you empower the people, and that obviously great in its own, but it's also because otherwise the company just can't operate in a remote way, or it will have a very hard time operating in a remote first way. When you build this remote first organization, did you have any design about the geographies that you're going to cover with your team? Any limitations to the geographies, or did you decide to go with the flow with the candidates that you will attract and just hire the best people wherever they are?
We went with that approach, hiring the best people wherever they are. So at this point, it's 30 people, half are in the US, half are abroad. But we get talent from all over. So Brazil, Chile, Colombia, Belarus, Ireland, the rest of the UK, Canada. Um, it's pretty scattered. I mean, we've had people in Croatia, other parts of Eastern Europe, um, Israel. Uh, as I said, are humans in the loop that do annotations. They're based in the Philippines, right? So pretty scattered, pretty global. I think it is hard managing some of the time zones, right? So Eastern Europe is 7 hours. That's more or less manageable. But if you look at East Asia, that's 12 hours, and then you're basically only communicating early in the morning or late at night, and that's hard. Um, and we don't have any real talent in East Asia or like Asia in general outside of the Philippines.
Yeah, the time zones is the only thing that technology cannot overcome right now. It would have
That's
been
right.
great if there was a way around them, but yeah, I don't know what it could be. When you talk to other people, other founders starting the companies right now, what do you tell them? What kind of advice do you give to the people thinking about starting a company in AI?
It is actually funny because 3 years ago, an AI startup. I mean, there were still several, but it didn't feel as common as they do today, right? I think it's become much more mainstream. Data AI startups are much more mainstream today, and I think part of that is like Open AI, the release of like GPT-3 and DALL-E 2 this year. It's made AI much more mainstream. So I come across a lot of founders that want AI, want like a data driven company, but they don't necessarily come from an AI background, right? They might come through product, or they might have conventional engineering, or they might like be rock stars in a particular domain, like in terms of building businesses, or sorry, doing like business development, like sales or marketing or something. But they don't really have a good sense of what AI can do, can't do. And so my take there is always focus on not the AI that you want to introduce today, but how acquiring data makes the product better, right? So like how are you going to get data once you have the data? If you had to just make decisions off the data, how do you go about making those decisions? And then how does that deliver value to the end user? Because once you have a really good um, thesis, and once you have a really good kind of trajectory of what that data flow looks like, you could start automating it through AI, right? So in our case, it would have been invoices have a lot of value. No one would argue with that. Unlocking that value is done through humans with spreadsheets. Once you do that, you could actually give people insights into their spend, and they can make great decisions off of that. I didn't once mention AI, right? But then you can go and take that data trajectory and figure out where can you apply AI to automate that and make it an AI first product. And that's why I always say separate the two, because unless you have the real AI expertise, you can't really weigh in on what AI is capable of doing. So um, like artificial intelligence is a technology that enables a particular product to be better, to be have better unit economics, to be more magical. But it's usually best when it's behind the scenes, right? Like it works, you don't even notice it's working, but you just have a really beautiful user experience. So TikTok is one of the best AI companies out there. I mean, politics aside, it has just really great immersive AI that works behind the scenes. You don't even know it's there because it just does a great job of surfacing content that you'll enjoy watching based on your interest, right? Based on what you've watched in the past. And that's the way that I think more AI companies should operate, which is let the AI work behind the scenes to unlock value. So focus on the value that data can deliver, and then partner with AI experts or higher AI talent to go and introduce that. But don't start with like what is the sexiest model and how do we use it to deliver value.
That makes perfect sense. And I like the way you put it, that the AI is at its best when it's invisible. I recently came across a survey of the enterprises, and they were asked, do you use any AI systems at all inside your organizations? And there was a sizable chunk of those who said, yes, we do. But just as large group said, no, we do not. And I thought, it means that group is just don't really think through the question, because if they use some of the very basic systems
Mm-hmm.
supplied by Microsoft, Google, and others, they definitely already use AI just without realizing that
Mm-hmm.
that's the case. Okay, so looking at the greatest, sexiest models in AI and looking at the evolution of AI that we witnessed, I think, especially over the last few years, what do you see coming in the future of AI, and what excites and concerns you most there?
A couple of things. I think GPT-3 and the other alternatives are really great. Not only for copywriting, which changes the game for basically every single white collar role, right? So marketing, sales, documentation, really anytime you have to even draft emails or some sort of copy, like I think you're going to see AI baked into everything. So I'll give you an example. Notion, which is the documentation tool that's become really popular, um, it's introducing AI so you could compose faster and better. And it's doing it in a way where now every single user of Notion, whether they know anything about AI or not, is going to be using AI to then do their work, right? So all of a sudden you're using AI, AI is powering what you do, and you don't even realize it. And I think that's really powerful. That's powered by GPT-3, right? Because it's able to generate language. But I also think the code generation is going to be really interesting. So as programmers, you'll be able to write code in an environment where you could auto complete your code that you're writing. You could get like a code assistant to find like issues in your code and debug it and suggest alternatives. You can actually go and translate your code into other languages, even if you don't know the other languages, right? So all of this is powered from generative models that do some sort of copy or code. So that's one area that I'm super excited by. I think many companies will start using it, and there'll be new companies, like verticalized companies around this technology, right? So instead of copywriting like more generically, you might see copywriting for legal or copywriting for healthcare, or copywriting for finance. That's super exciting to see. I think the other bit is you see these like big multimodal models for document processing, like the ones that we use at Glean. That's going to become ubiquitous as well. They're going to handle all sorts of like any sort of manual data entry, and that's going to become it's going to just like change the nature of work for professions where there is a lot of document extraction, text extraction. And I think graphic design, at least given the technologies that we've seen this year, that's also going to change dramatically. So like DALI 2, um, Stable Diffusion, Midjourney, these are companies that are taking text queries and surfacing really beautiful graphic design. And that means this is going to change the marketing game, the design game. So imagine you had to go and post on Twitter or LinkedIn or Instagram, or you have to do a marketing campaign via email. All of a sudden, you don't have to be a graphic designer, but you could go and design something super custom on the fly using a text command, and then you send it over to your targeted audience. And you do that without any sort of design expertise. That's really magical. Now all of a sudden you remove some of the friction in the creative process, right? So I think these are some areas that I think will make white collar work in particular much more valuable and interesting and complex, um, through the mass availability of these AI tools.
Definitely freeing humanity from the data entry and re-entry will be in and on itself a huge improvement of the work that we do. And
That's right.
speaking of the language models, I'm not sure if you had a chance to check out Chat GPT that just released by OpenAI, and I came across one person who used MBA assignments, I believe, and inputted there and the response and rated the responses because he is someone who is running a course, an MBA course, so he kind of has an experience of rating those. And I believe they were rated from a B plus to straight A, so very good. His conclusion was that he likely can't rely on essays, take home work for MBA course anymore. And maybe it's the case. I thought maybe we should give our students the results of the language model and just tell them, okay, this is what language model responded to that assignment. Now poke holes, find issues, or I mean, what's the purpose of asking them to do this thing if it can be done by the model? Maybe we should just offer it to them from the get-go without pretending that there
Right.
is no such thing. What do you think overall about the education part of the picture?
I think it's a really good example. I mean, I'm blown away by what the GPT-3 chatbot's able to do. And the way I look at it is that instead of starting with a blank canvas, like a spreadsheet or a Word document, and drafting like an essay, we will actually use AI tools to accelerate the work that we do, right? So you're going to start with something that's pre-populated with an outline, with maybe some basic copy, and it's going to be really great copy. It's going to be above average human copy, right? And then you use that as a starting point to improve the essay. So instead of taking 10 hours to write a really great essay, maybe it takes you 3 hours. I think that's awesome. That's the way it should be. It's just I think it'll take a while for, like, for example, universities that are grading these essays to like come to terms with it, right? But it just raises the bar of what a really great piece of work could look like. And I think that's going to be true for every single creative field, whether it's music or art or game design or whatever it might be. It just raises the bar entirely. It's honestly not that different from the fact that, like, decades ago people would write in binary, right? Like they would write in like lower level languages, and then you started writing in using like pre-established libraries, and it accelerated the pace of work, right? The code that you could write because you're using higher level libraries to go in and build on top of. And so AI is going to really just accelerate that, not just for code, but for every single domain out there, right? Just learning from data that was surfaced by humans, and now models have gotten to better than average human level performance, and it'll start to near like expert level performance in some of these fields, right? And that, I think that's the scary part, but I think we're still a decent chunk of time away from that, maybe on the span of years. Um, so I'm excited by that, but right now it's like a society as a whole has to come to terms with where AI fits in, right? But the entire playbook that we had like growing up is now thrown out the window.
That's very true. And I think you're absolutely right in emphasizing this point that it will be better than an average work done, but applying human experience on top of it and human work on top of it will make it even better. So as a result, we will get the outcomes that are way, way better than anything we could have expected from even above average human performances only,
Mm-hmm.
without the help of AI. Okay, I think that was our last question. So, where can listeners learn more about Glean, and where can they follow you? I know you also have a newsletter. So, what is it about, and how can people sign up for it?
So a couple of places. I think Glean, we're at glean.ai. So if you have vendor spend needs, looking for a new solution, that's where you can find more about Glean AI. I do have a newsletter. It covers major trends in AI and startups. So things like the GPT-3 chatbot. We've written on GPT-3 before many times. We cover these AI topics, but particularly from a lens of startups, right? Like how can startups be built around the technologies? And that's at encoresnewsletter.com, which we could throw a link there for. And then you could also follow me on Twitter. There, I really have more like daily updates on different topics in AI and startups in general. And that's my handle is AA Patel 09, which we could add that to link notes as well. But yeah, between Twitter and the blog and then Glean.ai, I think you could cover. You'll find all that you need about the topics we've covered so far.
Sounds good. We'll add all those links to the show notes. Ankur, thank you so much for joining me today. It was a great pleasure to talk to you.
Pleasure was all mine. Thanks for having me. Really amazing chat, and look forward to connecting with you in the future.